When Britain returned Hong Kong to China in 1997, the Chinese Communist Party promised autonomy in the city for 100 years under a one country, two systems framework. However, it took the regime only 24 years to decimate the city's free press and imprison its journalists. Apple Daily, a popular Hong Kong newspaper, was forcibly shut down after its owner was sentenced to jail and top executives arrested. The trading of its stock was halted and bank accounts frozen. Only 2 years ago, we witnessed Hong Kong citizens protesting the Chinese national security law en masse. At that time, we didn't know how things would unfold, but 2 years later, the law became a reality. The free port of Hong Kong fell into a police state in front of our eyes. What are we going to do? Hello everyone, welcome to my show. I'm Lei. The day before Apple Daily was shut down, the Hong Kong High Court heard the first case under the notorious new national security law. It was against a man named Tang Yingjie. There was no jury. Tang was charged with violating the national security law about a year ago when he was driving a motorcycle with a flag that read, "Revolution time, revive Hong Kong." He didn't stop as instructed by the riot police and was eventually taken down, ending up in court. The timing of these two events right before the CCP's centennial anniversary sends a political signal. First, the regime wants to pay tribute to its anniversary by highlighting Hong Kong's second return to the motherland. According to the CCP's logic, ending the one country, two systems policy and restoring full CCP control over the city is a great political achievement. The second agenda is to test the new alliance recently formed at the G7 summit that has taken a bold step in denouncing China. Canada, Italy, France, Japan, the United Kingdom, the United States, and Germany issued a rare joint statement highly critical of the CCP for its behavior in Xinjiang, Hong Kong, and Taiwan, and they demanded a thorough investigation of the origins of the coronavirus. The CCP wants to break this alliance by identifying the weakest link. Moreover, it's testing the seven nations to see if they're just all talk, no action. The CCP knows that it's just hot air when nations denounce or condemn it. It doesn't care. What it fears are real actions such as economic sanctions and decoupling. So how should the world respond? Let's take a look at one Western nation's year-long battle with the CCP. Their experience is noteworthy. Australia is the unlikely Western country that has picked a fight with the Chinese Communist regime. CNN called the idea of Australia's fighting a war against China on its own ridiculous. Australia's military spending is only 1/10 that of China's, which is the second highest in the world. Plus, China is a nuclear power, Australia is not. However, Scott Morrison's administration was the first to call on the international community to conduct independent investigations into the origin of the coronavirus. It was a major turning point in Australia-China relations. Enraged that Australia dared to stand up for itself, Beijing decided to teach Canberra a lesson. Last April, right after the pandemic shut down the world, the CCP imposed a wave of sanctions against Australian products, including barley, wheat, wool, beef, coal, copper, cotton, lobster, sugar, wood, tourism, wine, and craft beer. The CCP thinks that Australia is an easy target since China is its biggest trading partner. For every dollar of goods that Australia exports, more than 1/3 is exported to China. But things didn't turn out the way the CCP anticipated. Data released by the General Administration of Customs of China on January 14th show that last year, total Australian exports to China were 148 billion Australian dollars, only 3.9% less than the 154 billion in 2019. On June 2nd, data released by the Australian Bureau of Statistics show that the Australian economy rebounded strongly in the first quarter of this year at 1.8%, beating the expected growth of 1.5%. Australia's exports have grown across the board. expanding into new markets such as Japan, India, South Korea, Thailand, Malaysia, Indonesia, the United Arab Emirates, the Philippines, Pakistan, the Netherlands, and Mexico. Recently, in May, Australia canceled 2 Chinese Belt and Road infrastructure initiatives. Beijing retaliated by indefinitely suspending all high-level economic dialogue with Canberra. Roland Roger, the lead economist at the Lowy Institute in Sydney, explained this latest move in an article titled, "Why Our Economy Can Afford to Stand Up to China with Belt and Road Veto." For example, Australian coal is the best performing commodity used in breaking the CCP's ban. To overcome the sanctions, Australian producers have moved their export markets to other countries, especially India. By January of this year, Australian coal exports, if calculated on an annual basis, had increased by $9.5 billion from before the CCP's ban, and that's a growth margin of roughly more than 10%. But China has suffered from the severe consequences of banning Australian coal. Dozens of cities and at least 5 provinces have had to curtail electricity use. There have been power outages in Zhejiang, Jiangxi, Hunan, Guangdong, Shenzhen, Beijing, and Shanghai. China's domestic coal prices have skyrocketed, and this problem is only going to get worse as the demand for electricity increases. As China aggressively builds its 5G network, the 5G base station consumes energy 3 times more than 4G. China's steel industry, which has been the source of disputes with the EU and the U.S. for dumping products at artificially low prices, is also affected by the coal ban. A letter dated June 22nd from the sourcing department of Shougang Group, which is the second largest state-owned steel company, to the Shanxi Coking Coal Company became public. The letter stated that Shougang's coke coal inventory had fallen rapidly, and one subsidiary could run out of coal at any time. In the letter, Shougang pleads with the Shanxi company to lend a helping hand in finding alternative sources. China, the world's largest steel producer, is also seriously affected by the sharp price increase for iron ore. Australia is the largest iron ore exporter, and China is the largest importer. 67% of China's iron ore came from Australia. Moreover, Australia controls the global iron ore pricing. When the CCP started its trade war, iron ore prices rose from $60 per ton to over $200. China imported a record 1.17 billion tons in 2020. The price increase cost China at least $100 billion. Not only that, the cost increase for iron ore has raised the price for steel in China significantly. Coupled with the supply shortage of the coal, the sharp increase in the price of bulk commodities has caused inflation in China. So, as a result of the electricity shortage, China is now forced to buy coal at a higher price from the United States and Canada, both Australia's allies. Meanwhile, India, one of China's adversaries, is enjoying higher quality Australian coal at a lower price. Ironically, the trade war not only had no effect on Australia's exports, but also actually helped its allies and the CCP's adversary. Everybody wins except China. This just proves that when the CCP attacks someone, it hurts only itself. The CCP doesn't have any friends. That's against its fundamental nature. The rest of the world should learn from the Australian experience and stand together and not back down. On June 24th, the 26-year-old Apple Daily published its last issue. From midnight, Hong Kong citizens lined up at newsstands across the city in the drizzling rain, waiting to get the last edition of the paper. The paper sold 1 million copies, more than 10 times its normal distribution of 80,000. The headline on the front page said, Hong Kongers bid a painful farewell in the rain. We need to take action to support the Hong Kong people's freedom, because if we don't, their reality today may become ours tomorrow. You can watch my last video on what the CCP is and get a historical perspective on how the West repeatedly misjudged CCP. Thank you for watching, and I'll see you next time.